You're listening to the AZREIA Show. If you're looking for quality real estate investing information that you can trust, you've found it. Stay tuned and join the tens of thousands of members that have already benefited from AZREIA, your home for education, market information, support, and networking opportunities that will advance your real estate investing career.
Hello and welcome to AZREIA Show. This is your weekly dose of real talk, real estate deals, and real estate success right here in Arizona. In today's episode, we'll be discussing self-directed IRAs with Nate Hare. So Nate, you have been kind of everywhere. I know self-directed IRA and Matt Sorensen, and they have a big platform. So tell us, what is a self-directed IRA?
For those of you who don't know what a self-directed IRA is, it's really just a retirement vehicle that allows you to invest your retirement dollars into private assets versus public assets. So that's what we specialize in at Directed IRA, is giving somebody a retirement account, whether that's a 401k, an IRA, and we've got some other accounts as well. But we don't make you invest in stocks, bonds, and mutual funds. We allow you to invest in really anything the IRS allows, which includes real estate.
Mm-hmm.
I would say for people that are interested in real estate, they are in real estate, they're already buying their own rental properties, and that's where their knowledge base is over the stock market. I would say a self-directed IRA is something that you need to have, because you can probably make the needle move more in your retirement account by investing in what you know and understand best.
Mm-hmm.
And really self-directed, that term, it's just a marketing term.
Yeah. Okay.
We call it self-directed because we don't have investments that we sell our clients. Our clients tell us what they want in the retirement account.
Gotcha.
So as far as what a self-directed IRA is, it's just an IRA. It's no different than an IRA at Vanguard, Fidelity,
Okay.
Charles Schwab. It's just that they sell investments, we don't,
Mm-hmm.
and we give you more freedom to invest in what you know best.
So it sounds like with self-directed IRA, you have more control over what you invest in versus some of those big box stores.
Yeah, you really have full control. I mean, we basically give you the keys to the car and say, you tell us where we're driving to. And people don't really understand. And I kind of learned this by accident, to be honest. I never went to school to teach people about retirement accounts.
Yeah. Uh-huh.
I was a real estate investor. Before I got right out of college, I got into the mortgage industry. I always liked the numbers and the finance side of real estate. I owned my own rental property. I had 17 rentals at one time, all in, my name or my LLC.
Okay.
And I thought I knew enough about real estate just because of the fact that I had bought a lot of real estate. And then in 2012, I was recruited by a company out of Houston, Texas, that was doing these called self-directed IRAs. And up until that point, I'd never even heard of a self-directed IRA.
Mm-hmm.
I had an IRA, I had a retirement plan with Northwestern Mutual, and it was invested in what I thought I had to invest in, which was a mutual fund. Meanwhile, I'm making a lot of money in real estate. So when I got this call in 2012 to teach people how to invest in real estate through an IRA, I thought, well, hold on, is that even legal?
Right.
I've never even heard that. And nobody that I worked with in the, in my sphere of investors, nobody was doing that.
Mm-hmm.
So in 2012, I went head on into this realm of just teaching people how to use retirement accounts, because I was one of, like almost everybody out there, that I wish I would have known about this 10 years prior to me getting lucky enough to hear about it.
Right.
So yeah, it's a powerful tool for people that want to have a little bit more control over their retirement time and assets, invest in what they know best, or just diversify and have, maybe some of their retirement in the market and some of their retirement into some private assets that are maybe a little bit more tangible or give you some cash flow opportunities.
So outside of control, what are the other benefits?
Yeah.
So I would say the benefits of self-direction first. Well, let's say the benefit of a retirement account in general is that retirement accounts, 401ks, IRAs, they're not taxpayers. So that's one key component that I think any investor, whether it's real estate or something else, should understand, is that, especially for real estate investors, your biggest expense oftentimes is income taxes, right? How do you manage the taxes that are going to hit you as a tax-paying individual when you're buying and selling real estate, or when you start scaling your business and making a lot of money? So I think the biggest thing to understand is just the difference between you as a taxpayer and your retirement account, which is not a taxpayer. It doesn't matter if you buy and sell stock in your retirement account or a rental property in your retirement account. Retirement accounts are tax exempt. So if we equivalate that to real estate, you talk about the rental income on real estate, the capital gains that you pay on real estate. You don't have to pay any of those taxes in an IRA.
Yeah.
So that's one big needle mover. Your money grows much faster in a retirement account. The other thing is, like we said, control, right? You get to invest in what you know best. If it's real estate, if it's cryptocurrency, it doesn't matter to us. Just invest in what you know and understand best. But then if you want to take it further down the trough with real estate, I mean, to me, real estate's always been a more attractive investment than a stock. The stock market does great.
Yeah.
I just don't understand it enough to know that, to call myself an expert in it. But also there's a big difference, I think, with stocks versus a rental property. A stock, to me, it's somewhat of a speculative investment, but it's not tangible. It's not tangible like a house. You know, houses, there's an address, there's a parcel. You can drive by it, you can touch it, you can feel it. It's a tangible investment. It's almost impossible for a property to go to zero value. It's very possible a stock can go to zero value.
Oh, yeah.
So it's a good hedge against some of your stock market assets. But then real estate's not only tangible, it gives you cash flow, it gives you appreciation, there's multiple streams of income. So just if you're just thinking about it, you don't even have to be a real estate investor to get this concept. If you're trying to protect your retirement portfolio and make a little money at the same time, why would you not want tangible, cash flowing, appreciating assets in an account that doesn't have to pay taxes?
Because you're going to take the $100,000 in your 401k, for example, you're going to transfer it over to directed IRAs account. And then, like you said, with stocks, if you want to buy $100,000 in stocks, you got to have $100,000.
Yeah.
Put that $100,000 from your IRA to real estate, you could do a bunch of down payments and buy multiple.
That is a huge point. And that's one of the biggest misconceptions I think people have when they first hear about self-directed IRAs in real estate, is that I don't have a large retirement plan. You know, you don't need a large retirement plan. This is, again, one of the coolest benefits to real estate and a retirement plan is you can still use leverage from banks and other creative financing techniques on real estate that's owned in your retirement plan. So if I want to buy, $500,000 of stock and I only have $100,000, I can't do that.
Right.
But if I want to buy a $500,000 rental property with a $100,000 down payment from my IRA, I can do that because there's lenders out there. And this, I didn't know this in the mortgage industry either. I didn't realize that there's banks that loan to retirement plans.
Wow.
We have a list of them. Yeah, we have a list of them on our website. So you can buy a larger asset than what you have as far as capital available in your retirement plan by leveraging bank financing when you're buying real estate. But then it also gets us into the other creative avenues of real estate, which is buying property subject to seller financing. All of those strategies work inside of a retirement plan.
So let me ask you this, Nate. So if you have a retirement account, let's just say an IRA somewhere, and then you transfer it over to self-directed, right? You make that deposit into that account. And then let's just say if you see a real estate deal that you want to do, you just use that money that's in that retirement account, use that for the down payment to acquire that asset.
Essentially. Okay. But what you want to be careful of is, even advisors get confused with this. Like, how are we actually buying a piece of real estate with cash in a retirement plan? What we're not doing is we're not just taking the money out of the retirement plan and handing it to market, right? Because that's a distribution out of your IRA to
which
you.
Is a taxable
event. Which is a taxable event and can be penalized if you're under a certain age. What we're doing with a self-directed IRA is no different than what Fidelity does when you buy a mutual fund, right? When you tell Fidelity to buy a mutual fund in your IRA, they just exchange your IRA asset of cash for the mutual fund. And then they'll hold documents showing that your IRA owns XYZ mutual fund. We do the same thing, just replace the word mutual fund and put real estate. We're going to buy the real estate in the name of the IRA. We're going to exchange the IRA asset of cash for the real estate. And the document we hold that shows evidence that your IRA owns this property is the deed. And the deed will show that Marcus's IRA owns this property. So how does that work from the beginning level? Is, let's say you've got an IRA set up with us. You got a little bit of cash in there. You're ready to rock and roll, find a deal. You're going to do all the same legwork as far as finding the property, negotiating the terms with the seller. This is where the self and self-directed comes from. You're going to still do all that work to find it, vet it, and figure out if you want it owned in your IRA. But then all you got to do that's different is the buyer on the contract isn't Marcus. It's Directed Trust Company for the benefit of Marcus's IRA. That's the legal vesting that you'll use on any purchase contract. We sign as the buyer since we're the custodian of the IRA. We'll send the cash directly to the title company, so it's not a distribution to you. And ultimately what we just did is we exchanged your IRA asset of cash for an asset of that real estate, but everything at the beginning was always in the name of Marcus's IRA. But you did all the legwork to find it.
Okay. So now, because I'm coming from the perspective of a real estate investor, right? So now I own this property in my IRA and tenants are paying rent. Is that going back into the IRA or how is that being distributed?
Yes, so that's coming back to the IRA. And there's a couple different ways you can structure it. But ultimately, any income generated from the IRA-owned rental comes back to the IRA. Right? It's no different than if you bought a stock and you had dividends or you had a capital gain, right? All the profit just goes back to the IRA, but it's not taxed. So same thing with rental income. My Roth IRA owns a rental property. The tenants are going to pay rent right into my Roth IRA. They'll write checks payable to Marcus Maloney, direct to trust company for the benefit of Marcus Maloney. Those checks come in, they're not taxed, and it's considered income. And one thing people even get confused on, I had a conversation with a wealth advisor that still didn't understand this. They think that those are contributions to your IRA, and there's a limit on that. There's no limit on profit. There's only a limit on what you put in. There's no limit on what a renter puts in because that's profit on the investment. Now, obviously, if you're a real estate investor and you're going to probably purchase several properties, a lot of my clients just have a property manager in between the IRA and the asset, right? The property manager manages it, collects the rents, pays whatever expenses, and then whatever's left over comes back to the IRA. So there's a lot of different ways you can structure it, but ultimately what's not happening is you're not getting the rents directly. The rents are coming into your IRA. But then people say, then how do I benefit? You benefit from the distributions you get to take from your IRA. But the income from the asset has to hit the IRA first before you can take a distribution to yourself.
Okay.
So you just went over a scenario. Marcus is out there deal making. He's investing into his IRA. His cash flows come into his IRA. And then I'm a high income earner. I'm a doctor, lawyer. I get a lot of those around AZREIA. And I'm talking to Marcus. He's telling me how cool this is. And I want to put my money in an IRA. But I don't want to do all of that stuff that Marcus is doing. Like, what about that person?
That 4-letter word work?
Yeah. I got to go to work. I can't find
We try
deals.
to avoid that.
Yes.
You just do
I want to give it to Marcus, so to speak.
You just do what I do. I mean, I've been in real estate since 2004, but even to this day, I don't like doing all the work. Plus, I meet guys like you guys that are way better at finding deals and vetting deals than I am at this point. But like I said, I've always liked the numbers game of real estate. I like the finance side of it. So what I do, which is actually what a lot of our clients do, is we invest our IRA into real estate, but we just do it as the bank. So let's say Marcus has a hot deal and he's looking for some private money financing.
Always. Private
money is either money in your bank account or money in your retirement account. So the only thing different with that investment is my IRA is going to be the lender to Marcus or Marcus's LLC. My IRA isn't going to hold the deed, right? The owner of record is going to be Marcus, but my retirement account still holds something tangible, which is the promissory note, right? The note just lists my IRA as the lender. And here's the cool thing with lending is you get to negotiate terms with your borrower. So this is where borrowers who are looking for private capital and people that have a stagnant IRA want to get into real estate, but they don't have access to deals. This is where you can start creating win-win scenarios between that because the cool thing about private money, it's negotiable. It's not like Marcus is walking into a bank and you take it or leave it, right? For me and Marcus on that deal, we get to negotiate what terms are going to enable Marcus to perform on the property and knock it out of the park. And then what's going to be comfortable for me as a return to my IRA. So we'll come to a mutual agreement, but essentially now my IRA is getting interest income instead of the rental income, right? And interest income, again, here's the thing real estate investors need to understand. Interest income outside of an IRA is ordinary income. It's always taxed. Interest income in an IRA is never taxed. So there's a huge pendulum shift, I think, for private money lending by doing it in an IRA because you don't get much tax savings lending money outside of an IRA, but you get massive tax savings lending it, inside of an IRA. Plus, I don't have that 4-letter word work. Marcus is doing all the work. I'm just the bank. And if you think about it, I mean, what are banks in the business to do? They loan, don't own. So a lot of our clients just take the position of the bank and just invest passively into other people's deals, perfectly within the law.
That's great. So to kind of go backwards a little bit, and you mentioned doing the creative structures in the IRA. Can you wholesale? Can I lock up a contract under Mike's IRA and get my assignments thrown into the IRA? Oh.
Yeah. So there's only two things you can't do in an IRA when it comes to investment. That's life insurance contracts and collectibles. Those are the only two things in the tax code that are restricted from being owned in your IRA. So when it comes to real estate, you can flip contracts, you can assign contracts, you can buy rental properties, you can flip property, you can buy property subject to, you can
That's
buy
great.
property with financing or seller financing. Everything you can do when it comes to real estate outside of an IRA can be done inside of an IRA, provided you just have the IRA listed as the buyer on the contract. So if Mike's IRA wants to just flip a contract, you're still going to go out, find the deal, negotiate the terms, but the buyer on the contract is going to be directed trust company for the benefit of Mike's IRA. We sign the contract. And then when you go out and find the end buyer through closing, the title company is going to send the wholesale fee right back to Mike's IRA. And that's going to be completely profitable. But then again, that goes to one of those investments that's hard to offset taxes, wholesaling, unless you're running a full scale business. A lot of people that are just flipping contracts, that's still ordinary income.
Yeah.
No tax on an IRA. So it's a good way. It's a great way to get started on it, but 100% you can flip contracts inside your retirement.
I love that. So another common thing. So we talk about the high income earner. Okay. So what about, hey, I only got $5,000, $10,000, and I want to fund people's earnest deposits.
Yeah.
And that's common right now, right?
Yeah.
So do you see that at your IRA?
I do, especially for a little bit more. It doesn't have to be a younger audience, but I would say anybody that's looking to just, maybe dip their toe into real estate, maybe do some passive investing. Doesn't have to be like the scenario we had, which is I'd probably have like a first lien position on that house. We have a lot of people that do transactional lending. They do rehab lending, bridge lending. They'll loan small dollar amounts on real estate transactions. Again, it's perfectly within the law to do whatever you want. And we're not going to tell you what you can and can't do. So if that's a comfortable investment for you, by all means, do it in your retirement account and pay no taxes. But here's the other thing I like about those kind of deals is it seems like those are the people that are trying to learn about real estate. And I always say, you don't always have to pay for coaching. Just partner with an experienced real estate investor. Be a lender. I've learned so much from lending money to real estate investors just by being a fly on the wall, by being the bank. And oftentimes you get free coaching along the way.
Love it.
Yeah.
Wow, man. So many, we've only been doing this for 18 minutes. I think we just gave like
we dove right in.
Yeah. Wow.
So
Marcus,
what are some other misconceptions that you hear about with self-directed?
So there's, I would say the most common misconceptions are first, like, is this legal? I think we addressed that, right? The IRS does not tell us we are not allowed to invest in real estate, right? It's just life insurance contracts and collectibles. So any advisor that's telling you can't invest in real estate with a retirement account, they either don't understand the rules or they have a vested interest to keep your money parked where it's at.
I like that. So let's pause there. I remember my wife and I she was taking over her father's estate, and this was in the beginning stages. And we went to Fidelity and sat down. Hey, here's what's going on. Here's the situation. We're in real estate.
Yeah.
He has an IRA, all this stuff. Oh, he literally said, real estate? No.
Yeah.
Right out. And I'm thinking of all the Robert Kiyosaki books and all these books we hear. And I was like, wow, it just happened to me.
Yeah.
That guy told me no to real estate.
Yeah.
So
I've got so many stories like that. And, truth be told, some of them, again, I'm not picking on advisors or even CPAs, but some of them are just conditioned to just think inside the box.
That's how we talk about real estate agent.
Right. Exactly. It's the same thing. Yeah. Right. Real estate agent. So like one of the things I would say, you get this from a lot of CPAs that they don't invest in real estate. So this is one of the misconceptions I get is I hear a lot of clients say, my CPA said I should never buy real estate in an IRA because I don't get any depreciation, right? Let's tackle depreciation. So depreciation is good outside of an IRA because what do you use depreciation on real estate for? It's usually to offset your taxes because you're a taxpayer. What do we need depreciation for in an IRA when an IRA doesn't pay tax? There's nothing to depreciate it against. So it's not like you can't use it. It's just, there's no tax. Right. So to me, no tax is better than some tax. So that's one of the misconceptions. CPAs get it all the time. They're like, why would you do it in an IRA if you don't get depreciation? So you're telling me the alternative is because I don't get depreciation in my IRA, I should just invest in stocks, something I know less about that I make less money in. Again, it's a moot point. The depreciation in IRA, it's a moot point.
Yeah.
The other thing, and I get this quite often, is when you go to your advisor, for example, and say, I just heard these crazy guys from AZREIA and they had this crazy guy talking about buying real estate with my IRA. I want to do that. A lot of the advisors just envision that the individual is going to take the money out of the retirement plan and then go buy real estate. Now that I wouldn't advise to do because again, That's a
Taxable
distribution
event.
to you. That's a taxable event. So some of them, they don't even understand how self-direction works, that they think the person is just going to take a distribution out of their IRA and go buy real estate. So that's another misconception then.
So how does that transfer occur?
So how's are you talking about between IRAs or
Yeah,
an
so
IRA buys property?
so from IRA to IRA. So if someone says, Mike, hey, I got a Fidelity account and I got 10 grand in there, but I want to transfer it over to self-directed, how does that happen without that taxable?
So it's extremely easy. So as I mentioned, our IRAs, we call them self-directed, but underneath it all, it's just an IRA. And an IRA, it's an individual retirement account. You can have one at Fidelity, you can have one at Charles Schwab, Wells Fargo, you can have one at Directed IRA. There's no difference between an IRA with us and an IRA with those guys. So if you've got money in a Fidelity IRA and you want to move it to a Directed IRA, you just open the equivalent IRA that you have. So let's just assume you got a Roth IRA in Fidelity. You just open a Roth IRA with us. We do what's called an IRA to IRA transfer, which is all we do is Marcus fills out a transfer form, says, I want to move 10 grand. We fax that to Fidelity. Fidelity wires the money over. IRA to IRA transfers, you can do as many times as you want. You don't even report those to the IRS. The IRS does not care about moving money between different IRAs at different companies. So the other way that people can move money into a self-directed IRA or an IRA would be rollovers. So that's just a different way that we're moving money from a retirement account to an IRA. Usually when you hear rollover, it means it's coming from an IRA, it's coming from a 401k. So a lot of people who have an old 401k from a job that they work, maybe they have a current employer 401k. When you move that to an IRA, it's because they're not like accounts. It just has to be distributed from the 401k and rolled into the IRA. Those are just fancy terms. Essentially, you still don't pay tax. It just has to be distributed from the 401k before it can be rolled into an IRA. But again, there's no tax penalty on moving money between retirement accounts if you do it the right way.
Interesting.
You know, a lot was said over the last, like I said, in the last 23 minutes. I got a couple of things I'm trying to get out of my head. So one about paying taxes. The tax code is written for people that provide shelter, energy, jobs, and much more.
Yeah.
So if you have friends and family members saying, oh, business owners don't pay taxes.
Yeah.
The system is designed for that. So it's up to you to hire somebody like a CPA that understands this and participate.
Yeah.
It's there for everybody. We all have equal access to the tax code.
And I would say one thing that I've learned, again, this is just my own personal opinion. I think if you are really trying to get down the trough and really trying to analyze your overall strategy in life and with real estate investing, as a tax strategist comes into play. Instead of just a CPA.
Right.
Somebody that can actually strategize it for you. Because some of the tax strategists, they understand self-direction. We have a lot of tax strategists that actually use our product.
Well, this is how I kind of led into even knowing you guys is when I started getting into raising money in multifamily, my coach that I hired, he used Mark Kohler.
Yeah.
Right. And Matt Sorensen. And I was using a CPA, and every year it's like, hey, how do we save money on taxes? What programs? What's this? And I'm like doing all the studying, and I'm like, what about this? And they're getting annoyed. The CPA's getting annoyed, right? Like CPAs file.
Yes.
The hundreds and hundreds of, they don't have time for this. Until I hired Mark Kohler, it was like $400 an hour. I was like, you know, at the time I was like, no, but 30 minutes, this guy whipped up this design, and I just took that strategy and handed it to the CPA.
Yeah.
And everything was taken care of.
Yeah. Well, you hit the nail on the head. A CPA, and this is no shade to CPA. CPAs are hired to file your tax return. A tax strategist is paid to strategize your life for you.
Yep.
So I think, if you get the right tax strategist, I mean, it can make you considerably more returns by having your structure, having your assets protected, having a good tax conscious structure. Good tax strategists like Mark Kohler will talk about the self-directed IRA and how it fits within that whole dynamic. But that's the difference. And if you want to level up your game, sometimes you got to go to a higher level of personality.
And if you're listening to this, you're sitting down in your car driving, wherever you're at, and you think Nate has given you a tremendous amount of information quickly, go on YouTube, search Mark Kohler, Matt Sorensen. Do you have a YouTube?
I don't have my own, but if you search me, you'll find my videos.
I would just watch their videos. They're so charismatic and fun to watch, and you learn. And then through that, that's how I learned about you guys. And then another shout out to RCP Ignatius.
Oh yeah,
Ignite.
he's awesome.
Like, he's like, you need directed IRA here, man. Like, you know, I don't know.
Yeah. And that's a perfect
I-
example
yeah.
of somebody that really understands it. You know,
Yep.
Ignatius is a perfect example. He's a big proponent on self-directed IRAs because he deals with real estate investors. He understands the long game, right?
Yep.
So if you are in real estate, you need somebody like that on your side.
And that's the last point I want to drive home is all our business associates are investors or have a huge clientele of investors and understand how we think. And going into, you might be dealing with some problems of dealing with people that, the Fidelity example I gave, or and so on. So you definitely got to get investor friendly people that are in our world and all services in your real estate business, right? And that's where you guys come in.
I actually have a funny story. Can I tell a funny story? I have a client.
Yeah,
that
I
had a
love funny
similar
stories.
story to your story.
I actually like
Gotta
comedy.
make
So
us
if you-
laugh, Nate.
Yeah, you
Okay.
got to make
Make us laugh.
So this is just this just goes to show you, and again, it's not all of them, but every once in a while you're going to have, you know, a wealth advisor or some sort of advisor that's got you in public assets that just has a vested interest for your money to stay there and not go anywhere else. So I had a client tell me, she goes, you know, she's told me that she made the mistake of not calling me first, because what she did is she was setting up her self-directed IRA. She had already set it up and she wanted to move money from her Fidelity account. So she called her Fidelity advisor to tell him, I need to move some money over. So the Fidelity advisor told her, you know, well, you're moving it to a company that does what? You're going to invest in real estate? Oh, no, you know, that's risky and you don't want to do that. And she goes, well, first of all, I'm a real estate investor. Don't tell me what's risky. I know what I'm doing with my money. She goes, just send me the forms, send me the process so I can get this money moved over. And he said, well, you know, it's a real long process. It's difficult. She goes, listen, I don't want to hear all of it. Just send me the forms by 5 p.m. and I'll have them to you first thing in the morning. So the advisor sends her one form, right? So she fills out the form, sends it back, calls him back the next morning. She goes, okay, what's left in the process? Well, that was it. So she goes, you told me it was a long process and it was super difficult. So
That's terrible.
So again, you just got to be careful.
Yeah.
And again, I'm just joking, but you got to be careful.
Oh,
of
it's
the people
reality.
that don't have your
It is.
best interest in mind. They have their best interest in mind. And at least for us at Directed IRA, we don't care what you invest in. Just invest in something that makes you feel comfortable, and we'll act as your custodian, you know, with that asset. And I would say this, you know, one thing I want to tell real estate investors is it's not an either or thing too. I think some clients, they hear us speak and they think, oh, well, I should just be investing in my IRA and that's it because no. If you're a real estate investor, you should be investing outside of your IRA, but you should most definitely be investing inside of your IRA, because if you don't, you're just paying a lot more taxes than you should. And I've got a good friend that kind of oversimplifies it, but it's a great way to think about real estate investing as a whole. It's that he goes, I just want to make this much money. That's it. I don't want to make any more. I don't want to make any less. But this much money to him is he just wants to do enough deals in his name or his LLC so that his needs are met. Right? He could buy groceries. He could take the family on a vacation. He could buy Christmas gifts, right? Car payment, whatever the case may be. He goes, Nate, I just try to make that much money. But everything above that, as I get more deals, those are all going into my IRA. Because if I just keep doing deals in my name, I'm paying taxes on money I don't need. And essentially now I'm working for the government again. So that's a good way to think about, you know, investing as a whole is, yes, you should be doing deals outside of your IRA, but you should also be trying to identify deals inside of your IRA. And I would even take it further. Some deals are better outside of an IRA and better inside of an IRA, especially if you're starting out. So I would say, you know, you think about it like this. If you're out there looking for deals and you're a beginning real estate investor, I would probably say the deals that make money quick, do those outside of your IRA because you need to use the money, right? You got to put food on the table first. So maybe that's some of your flips. Maybe that's some of your bridge lending or your quick loans to a real estate investor. Do those outside of your IRA. But if you're finding deals that can be profitable later, don't pass on those like most beginning investors do. Throw those in your IRA. I have a client that did use this strategy and he started looking at these deals that he normally would pass on. And these were properties that had no equity. This is back in 2012. So we're still coming out of the, you know, housing bubble mortgage crisis. So these properties had no equity, no cash flow or very little cash flow. But every one of these properties, the homeowner was having a problem. They either lost their job, couldn't pay their property taxes. They were 2 weeks away from foreclosure. And these were MLS listings that expired. So every investor that talked to them said, there's no equity, not a deal for me. So they can move off. He goes, well, hold on one second. These homes are all owner occupied, so they're in great shape. Very little rehab needs to be done on these. The problem is just the mortgage. It's not the house, it's the mortgage. So he said, and these are in great areas that are bouncing back. He goes, if I can just take title to these properties and maybe just pay the debt off for them, I can take these properties over subject to with no equity in the property. So long story short, with a $70,000 IRA, okay, he bought 5 properties subject to the underlying financing. He just caught up the mortgage payments, gave the owner cash for keys, maybe a little bit of, money to touch up the paint or something. So he was in each investment for about 10 to 15 grand, but now he's got 5 properties with 70 grand. So he just rents those properties out, puts his property manager in play. Renters pay his Roth, Roth pays the mortgage. Renter pays Roth, Roth pays the mortgage. It's a long-term play, but these were perfect for his Roth because he didn't need the money right away. These properties are all in Austin, Texas. They're all worth about $700,000 each, owned free and clear in his Roth. So he took a $70,000 Roth and turned it into a $3.5 million Roth, doing 5 deals 1 year.
Wow.
So that goes to
awesome.
show you that as a real estate investor, you got to have your spectrum open. You got to have your radar open for deals that are best done for you and deals that might be profitable in the future that can just be, put on the shelf in your IRA.
So I was going to ask you about that, and you kind of touched on it about paying your mortgage through your Roth. How do you do that?
So it's just an expense. So just if the IRA owns the property, right? The IRA collects the income, the IRA also pays the expense. So that's a service that we do as the custodian. So if this property has a mortgage payment on it, you can fill out a one-time payment authorization, or if it's a recurring thing like a mortgage payment, you just fill out what's called a recurring payment authorization. So every time we get that statement, we just pay the mortgage right out of the IRA. So it's just an IRA expense. We do have a product that we use together with KKOS lawyers to make that process easy, where you can even self-manage it a little bit, which is what a lot of our real estate investors like to use, which is an IRA-owned LLC. So this is a little bit more advanced product, but it actually facilitates a lot of things and makes the process really easy, where instead of Marcus's IRA owning the property, Marcus's IRA can own an LLC that Marcus is the manager of, and then the LLC owns the property. That way, when the tenants, pay rent, they just pay the LLC. You can make the mortgage payment out of that LLC checking account, and you can kind of manage the money going in and out without having to contact us or fill out any forms.
Okay.
So that seems to work very well for active investors or people that are making an investment that has a lot of moving parts. Is let's just dump the funds in an LLC that you manage. It's still tax-free because the LLC is owned by your IRA, but then you have the checkbook. You've got access to the bank account. You make all the decisions. You just got to make sure it's all still IRA related. You can't take the money out and go to Vegas and put it all red. So, but as long as the money's coming in and out of the LLC for the IRA's gain, that's a great product to you.
Wow. So as we wind down here, Nate, I know you guys got some events. You guys do a lot of education as well. Let us know what's coming up in the directed IRA world.
Yeah. So in the short future, I would say we are kicking up our game with our webinars. We do webinars. We used to do webinars probably twice a month last year. So we've made a dedicated commitment to ourselves to do webinars every single week. So if people want to join in and get some, free education through Directed IRA, just go to directedira.com, register for our newsletter, and we do a free webinar every Tuesday at 12 p.m. Pacific time.
We probably should get that on our calendar or something for AZREIA. I'd be happy to promote those. Yeah.
Awesome. I'll send you guys the link.
Okay.
And then outside of that, outside of the virtual webinars, we do 2 big events a year. Our Self-Directed IRA Summit is our first one. This is just a 1-day crash course, everything you need to know about self-direction. This year, we're doing it virtually. So this will be an opportunity for anybody, regardless of where you live, to join in. And that's going to be April 17th.
Okay.
Tickets are available. The website's sdirasummit.com. You can get discounted tickets there if you're a client. Free tickets. So,
there you go.
Little plug there. So that's our Self-Directed IRA Summit. And then we have our big 2-day Alt Asset Summit, which you guys were a part of. Thank you very much.
Thank you. Yeah.
This is our biggest live event that we do. And this year we're going to host it in Costa Mesa, California. It's going to be in October. You can check out the website, altassetsummit.com. This is a little bit different of an animal. We don't spend the entire time talking about self-direction. We spend the majority of the time talking about alternative investing.
Okay.
So that includes real estate, all types of real estate investing, multifamily, commercial, land, oil and gas, mineral rights, private lending. We get a lot of different speakers up on stage too. We do some investment panels. Some of our investment sponsors that work with us quite a bit, we have mutual clients, they'll get up there and talk about, what they're doing, what they look for as far as investments in the alternative space. And I love saying alternative because it's funny how they make alternative sound like it's like rogue.
Yeah, like it's something different.
Like, first of all, real estate is the most traditional investment on the planet, I think, but they call it an alternative.
Yeah.
So, but with alternatives, this is important to understand, and this goes outside of real estate. I mean, we're talking about cryptocurrency, all that stuff. That's an alternative investment. But most people don't realize how profitable alternative investing is. Yeah. We've actually seen some audits come through Fidelity and the IRS that actually show the average American with a retirement plan, and this is we're talking about $45 trillion. The average person has less than 2% of their assets in alternatives. So that's the average person. If you look at a person with a net worth above $1 million, they have 22% of their assets in alternatives. And then when you look at ultra wealthy people with a net worth above 30 million, 50% of their assets in their retirement plan are alternatives. Wow. So if you don't think this is being done, no, it is. By the rich and the wealthy. They've been buying and selling alternatives in their retirement plan since the mid 70s. It's just that we don't get shown the opportunities.
Opportunities. That was the key word that you said.
So the game plan for you is obviously education, right? So you got to go to the webinars, go to the virtual event, come to AZREIA, just learn. And then when you're ready to participate or your main event in Costa Mesa, Marcus and I went to it in Scottsdale last year, and there is all these alternatives. But like when you hear crypto, you hear like, oh, Bitcoin's crashing or someone got ripped off or that, there's all this kind of crazy stuff. So what I liked about the event in Scottsdale is I sat there and you guys handpick trustworthy people on stage. You know what I mean? Like you go get the best of the best all around the country. They fly in and then they say, hey, here's what we offer. Here's our alternative. Yeah. And they're vetted at some level, I'm imagining, right?
They're vetted in the way that we've had a working relationship with them. Yeah. So, I always tell people, you still got to do your own due diligence. Right. But the people that we have up on stage, we have a working relationship with. We know that they know their stuff, but we also try to give a variety. We don't try to, push people in one direction or another. We want to try to give people at least a wide spectrum of investments so that they can make decisions. They can make their own investment decisions. Because at the end of the day, we're not going to tell you. You got to tell us what to invest it in. So I think that, education is key. You got to get out there. I would say one thing to add to what's critical for a successful real estate investor is not just the education, but it's relationships. So real estate is a relationship business. So is self-directed IRAs. And this is where I'll give you guys a plug, is that if you are not a part of your local RIA, you're missing opportunities on investments that you can deploy your IRA into. So if you're just sitting at home and you're thinking you're going to be a savvy self-directed IRA investor sitting behind your computer, it's going to be very hard. Yeah. You got to build relationships. Even to this day, my investments out of my retirement account are to people that I've met over my last 13 years, but I get out there and I meet people. Yeah. So that's one advice I would give for any beginning real estate investor is education's key, but relationships is even key.
So true. So true. Well said. So how do we get a hold of you? Any special AZREIA discounts or anything? All right. Got to make sure they know.
We always like to treat the AZREIA family well. So if you want any information or you want to open an account, just go to directedira.com. Okay. I always suggest, instead of just opening an account, which is an option, takes you 5 minutes online, schedule a call with one of our IRA account executives. That way you can ask your questions. They can kind of walk you through the process so that you're crystal clear on how this works. And then if you are a part of the AZREIA family, just use the promo or referral relationship code on the application and put AZREIA, and you save $200 off your first year fee.
Oh, great. Thank you.
Cool. Yeah.
Awesome.
All right.
We're good.
Any closing remarks? How can we get a hold of you directly?
You can go to directedira.com, and under that same tab, schedule a call. You can find me down toward the bottom.
Okay. Cool. Excellent. So you all know what to do, AZREIA family. Implement what you've learned today. You've learned quite a bit. This is just the tip of the iceberg. There's much more in there. KKOS lawyers do a phenomenal job. Self-directed do a phenomenal job. So reach out to Nate, reach out to Self-Directed IRA, and let's get you started.
Awesome.
Thank you.
Passive, really I think this massive. Stable cash flow, lavish. All the finance for the masses. This 14% in manufactured housing. Really, all the deals I be doing is kinda hard to keep on counting. Not really. 10% for the year. It's clear this the new way. Little competition in my arena. Need a house cost arena strategy.
For 10 to 14% returns, invest today with Silvercrest Opportunity Fund.
10% passive, the checks are blind with collateral.
Thanks for listening to the AZREIA Show with your hosts, Marcus Maloney and Miichael Del Prete. We hope you enjoyed this episode. If you found this information valuable, head over to azreia.org and learn more about our community.